Welcome back to the Kaspa Silver YouTube channel. In today's video, we're going to be taking a look at Taraxa. I've gotten a lot of requests recently about covering this coin because it's a proof of stake that uses block DAG. And a lot of people think that it's going to be some kind of competition to Kaspa. But just because something is block DAG, it does not mean that it's competing with Kaspa. And not only that, there's a lot of fundamental issues that Taraxa has that I personally think they're issues. So just remember that these are my opinions. Always do your own research, and let's get into it. So to start off, in the past year, Terra has produced a 300% return. And if we're looking at Kaspa, Kaspa has produced around 2,193% return. If we go to the all-time chart for Kaspa, you could see that it's produced a 25,000% return. And if we do the all-time chart for Terra, it's produced a negative 93% return. Now, I'll give Terra the benefit of the doubt, and this is the fact that Terra has just recently started its own mainnet. Before it was considered a coin, it was a token under the Ethereum network. And we can prove that right here where it says Taraxa's native token conversion was completed on April 3rd, 2023. So that was really recent. So pretty much it looks like Terra's just getting started now after the years of it being developed. But the way it got developed was sadly through a token distribution. And this poses a lot of risk, and I'm going to be getting into that here shortly. So the foundation had about 20%, the team gets about 15%, private sales got about 15%, and all that kind of distribution there. The circulating supply is at 3.5 billion, total supply is at 10.2 billion. There's really no max set supply yet. That's just because it hasn't hit the max total supply yet, but new Terra is made every time someone is validating the network, because you have to stake your Terra, since Terra is a proof of stake, which also poses more risk. And now the risk that those pose come from the SEC in America, and I just think it's an issue right now with proof of stake, since there's just really no regulatory clarity. And we're going to see that here if we're looking in the document of the SEC suing Coinbase, you're going to see that they labeled a bunch of trading symbols that they considered that were crypto asset securities. Now, this court has not been any final solution to what's really going to happen with this case. It's still up in the air, but the SEC is still trying to attack these kind of cryptos. And if we continue looking here for an example, they talked about ADA. And for ADA, you could see that they talk about 3 different entities that were behind ADA's ICO, and they were selling ADA for Bitcoin on average price of 0.0024 per token, raising approximately about $62 million for Cardano. And then they say today 3 entities are responsible for Cardano: the Cardano Foundation, a Swiss entity that is legal custodian of the Cardano protocol, IOHK, an engineering company, and then the last one is Emergo, an entity with offices in New York and California that, according to its website, is essentially the for-profit arm of Cardano. And this is where it comes in, where I start to call these cryptos not cryptocurrencies, because they're not doing the currency part of crypto, but crypto companies. They're like direct companies that are profiting from these coins going up in value. And that's pretty much what happens with these ICOs, and Terra is kind of no different. I mean, if we look at the distribution, we could see that it has a foundation of a 20% distribution to that, and then the team got 15%. So it's almost as if there's some type of entity or central company that's behind this coin. Not only that, we're going to get into its utility, and honestly, it's just, I don't really see anything that's meaningful about its utility. For starters, it says here about Taraxa on CoinMarketCap. Taraxa is an EVM compatible smart contract platform based on T-graph consensus, utilizing block DAG, enabling Web3 to solve real-world problems. And honestly, this sentence alone really doesn't tell you much about what's going on here. So it does require us to take a little bit more look at their website to see what they say. To start, I do want to at least explain the EVM compatible smart contract platform. EVM compatible means that a blockchain is able to run the Ethereum virtual machine and execute Ethereum smart contracts. This means that developers can write and deploy the same smart contracts across multiple EVM blockchains without needing to make significant changes to their code. And this is what Kaspa, I'm pretty sure, is going to be doing in the future once they implement smart contracts. But But it's really hard to compare these two coins because Terra is doing something completely different than Kaspa. Terra's just a smart contract platform. That's pretty much it. Kaspa is not a smart contract platform, but an actual currency that's meant for global adoption. And you're going to see that even Terra admits that they're not a coin like that. So it poses a lot more risk. Not only that, it is proof of stake. And the fact that it's proof of stake, it poses risk because even the SEC has talked about these exchanges that are allowing people to stake their coins is an issue. They think that's a type of security, and that just poses more risk on the coin itself. If it's labeled security, then it gets delisted from these exchanges, which will just hurt its adoption. So I talked about Terra having this ICO, but when we compare that to Kaspa, Kaspa has no ICO. There's no pre-mine, there's no allocated coins. It was completely fair launch. And a lot of people value that simply because this means that private companies or VCs were not able to get a ton of the coin before it launched. And this is why you have Kaspa's organic growth chart right here, and it starts at absolutely nothing and just continues growing over time. With something like Terra, when it releases with the pre-allocation, you see that it starts usually at a high price, and then the private investors or whoever has the unlocks for the coin just pretty much sell off once they get the opportunity. All right, so taking a look a little bit more at the fundamentals, you're going to see here that says it's the first native EVM integration in BlockDAG, first proof of stake BlockDAG, first dynamic BlockDAG proposal rate, first true finality in BlockDAG. I had also taken a look at the Wayback Machine for this website because I was seeing a pattern and people were noticing it that they just recently were putting BlockDAG a lot on their website, and I'm pretty sure it's because they're trying to hop on the trend of BlockDAG because Kaspa is the real reason why BlockDAG is becoming super popular. You could see from the Wayback Machine right here, this is back in May 30th of this year. They didn't have any of that BlockDAG in this welcome page at all. And it looks like they just recently put it in to kind of fit a narrative. And from what I'm seeing, this coin is purely hype at the moment. And you're going to really see that later as we continue getting into it. So here it talks about the supply a little bit more. The initial supply is 10 billion tokens, but as outlined in our economics, block rewards from staking our running consensus nodes will be inflated at a maximum of 20% every single year. Now, the next thing I wanted to talk about is how you could validate transactions on the network, which requires to be a validator. And from what I'm seeing, it's looking like it's not as centralized as Ethereum because Ethereum requires like 32 Ethereum so that you could be a validator. So that's equivalent to like $60,000 or something like that. And when you're looking at Terra, one thing I have noticed is when you register your validator node on the community site, it requires KYC. And that's kind of not good when it comes to decentralization because the whole point of it is that it's sort of anonymous for the most part. And then it also says you could register your validator node by directly interacting with the on-chain DPoS contract. So to validate nodes on the network, from what I'm seeing here is it only takes 1,000 Terra that you need to self-delegate. And so that's not that much at all. I mean, the price of Terra right here is at 0.004 and 1,000 Terra right now is only about $4.75. So that's the minimum you need to run a validator node, looks like. So that's not bad at all. So that means that it pretty much could be decentralized when it comes to nodes. But still, the fact that it's proof of stake still poses some risk with centralization because it's much easier to control, especially when you're looking at the fact that they have that KYC on the validation of the community site. I mean, they even say it here, and this is a risk that I was saying. To comply with recent SEC rulings, United States persons and persons from OFAC sanctioned regions cannot receive token rewards from running nodes. All participants will be required to pass KYC to receive rewards. And that defeats the whole purpose of crypto. So continuing on here, let's get into the roadmap. And this is where I really start to see that this coin right now really has nothing going for it other than pretty much hype and trying to use good terms that are trendy so that it can try to get some kind of adoption and traction. So first off, it says that it wants to start with making app first approach in driving ecosystem adoption. Well, if we're looking at what app they created, They created a hype app, and it says launch the hype app alpha version, and then run hype campaigns in the Taraxa community to collect impact data and build our pitch. And if we continue reading, there are other things that they want to do is gain a portfolio of early project adopters for hype to help rapidly refine the product and build business development credentials, market hype to a wider audience via publication influencers, tie in Terra consumption into hype as traction builds to drive towards more sustainable economics in the Taraxa ecosystem, and then build additional apps as resources allow TrendSpotter and drive adoption in the same manner as hype. If we look at this app, it's literally what it says. It's a hype app, and pretty much people get paid Terra when they use keywords and they win rewards in Terra basically for just participating in this and promoting Terra to other people. And I really, from what I've seen on Twitter, people, when they're trying to promote this, will just say Terra is like Kaspa. It has block DAG. Like, that's what I've seen people say. And it's like so misleading because Kaspa is doing something completely different. It's actually being a currency. This is just simply a smart contract platform, which there's tons of competition already in the space. So it's really not innovating anything. And if we're continuing to look at something like Kaspa, Kaspa is actually bringing innovation to the table. They're not going to be only a smart contract platform in the future, but right now, currently, they're building a foundation to be an actual global currency used for the whole entire world that's fully decentralized, remaining proof of work, solving the trilemma, which means that it's fully scalable. So what are the things that it's innovating? It's going to be upgrading the consensus to follow the DAG-Knight protocol. This protocol will allow Kaspa to eventually reach internet-like speeds in terms of transaction speeds, which would be insane for a proof of work to be doing while remaining secure and decentralized. Not only that, the Kaspa Rust language coding is being implemented. This will allow Kaspa to reach 10 blocks per second very soon, and then it's going to increase its transactions per second. We're going to get into Terra's transactions per second here shortly. Not only that, we got an integration for Kaspa on Ledger. When this comes out, this is just going to help adoption a lot because many people don't even trust coins that are not even on Ledger yet. And then lastly, the smart contracts implementation. Eventually, Kaspa will adopt smart contracts. So in terms of smart contracts, it could compete with Terra, but as any crypto in the market, you need a good narrative. And simply from what I'm seeing, Terra doesn't have a good narrative. The best narrative it got is say block DAG, because it is using block DAG, and compare it to Kaspa. But that's really not true when you're doing that. Kaspa is very unique and it uses block DAG technology, and Terra is not the first really in the sense of meaning that it was the first to use block DAG, yeah, on an actual coin. But when we're talking about who created block DAG, well, it was the founder of Kaspa. The founder of Kaspa was the one that created block DAG. That is Jonathan Samploninsky. And if we're looking over here at the white paper, you could see that Jonathan Samploninsky is cited in their white paper for Terra. And pretty much this means that Terra wouldn't even exist without the founder of Kaspa existing. So he's the reason why Terra exists. And they're kind of like riding the block DAG revolution to try to gain some momentum for their coin. And that's kind of what I'm seeing here. Not only that, they're not using the fully fleshed out version of all of Jonathan's works. So from my understanding, they're pretty much using a combination of Ghost and a little bit of Phantom. And I think I've seen Spectre in there as well. But they're not really fully using the fleshed out version of the Phantom Ghost DAG protocol, which was done November 10th in 2021. You can see here that the access dates are 2019 and 2018. So they pretty much built this a long time ago, and it didn't even have the finished products of all these protocols that Jonathan was building. Not only that, the protocols that Jonathan's been building were always meant to really be for proof of work. They're not really meant to be proof of stake. And Jonathan has really good reasons on why proof of work is just more superior to proof of stake. If we go to their main website, another thing that I saw that they're advertising that I was not really able to find any information on was where right there it said an AI enabled system. I feel like they're just slapping these trendy terms to try to get some traction, because when I looked in the website where the introduction is and I searched here for I wasn't really finding anything about AI for this coin at all. I think they kind of just put it on there just to try to gain some traction because it's a trendy term. Now, when looking at the transactions per second, you can see that they could do 5,000 transactions per second, which of course is more than Kaspa. Their inclusive latency is 1 second, and then their finality latency is 4 seconds for Kaspa. The final confirmations is 10 seconds, and then every block is 1 second. So Kaspa is also not currently doing thousands of transactions per second, but it's really not even needed right now. But it is going to upgrade its transactions per second. And really, this is not the best metric to determine if a coin is good or not based on how many transactions per second it can do. I actually did a video explaining that, the importance of Kaspa increasing the blocks per second and transactions per second. And this picture really orchestrates exactly what people do. They see high TPS and they think, wow, that means it's really good. And then if you study blocks per second and what Kaspa is doing, you realize that the way it's increasing its transactions per second is actually doing it in an innovative way that's actually making history. So it's really important to understand that. Not only that, we've tested already 10 blocks per second on the network, and we've seen it go up to about 2,000 transactions per second, but I've seen that the top out would be about 3,000 transactions per second. And you could see here that when we did that test, we had about 150 transactions per block, and that's 10 blocks every 10 seconds. So we're going to be upgrading to this, but it doesn't stop there. Eventually, we want to see Kaspa hit a dream of 100 blocks per second, which would be an insane amount of TPS. So the last thing I want to cover is what Terra admits themselves. It says the goal of introducing Taraxa token is to provide a convenient and secure mode of payment and settlement between participants who interact within the ecosystem on Taraxa. And it is not intended to be a medium of exchange accepted by the public or a section of the public as payment for goods or services or for the discharge of debt, nor is it designed or intended to be used by any person as payment for any goods or services whatsoever that are not exclusively provided by the issuer. Taraxa token does not in any way represent any shareholding, participation, right, title, or interest in the foundation. Now, I feel like this is kind of misleading because if you have an allocation, in the beginning I talked about that here, if you have an allocation to the foundation, and then you're saying over here that Terra is not supposed to have any kind of interest in the foundation, that doesn't make sense because the foundation profits off of the fact that Terra rises up in price, because then they could sell it. Now, I did read somewhere that the foundation's allocations are meant to never be sold, but I mean, I don't know how to confirm that they will never do that, but still the team actually got some allocations, and I'm pretty sure they're part of the foundation, so the team can sell whenever their coins get unlocked. So they kind of profit off of the coin because they did give themselves some allocations before it went out to the public. So really what I'm seeing here is that Terra really doesn't have anything going for it that I could see it competing with anything that is already doing what it's trying to do, which is a smart contract platform. You already have things like Ethereum that's the hardest to really try to compete with, but this competing with Solana, pretty sure like it just won't ever be able to do that. And currently in the roadmap right now, it looks like everything is just kind of hype, and I don't really know why anyone would be interested in holding this. I mean, they don't even advertise it to be something to be used as a medium of exchange or anything like that. It's simply to be used in the ecosystem if there's things built on it, but currently there's nothing on it. So it makes it even worse than Kaspa. When people try to make the argument that Kaspa doesn't have smart contracts, it doesn't matter because Kaspa is meant to be used for the public. You know, over here where it says that Taraxa is not intended to be these things, you could replace it with Kaspa and say Kaspa is intended to be a medium of exchange accepted by the public and used as payment for goods and services. And that utility alone is huge because that was the whole reason why crypto exists. It was to give decentralization and give power back to the people and make people become their own banks, basically, because the economics of the coin is set in stone with the code, and no one can manipulate it. No central person can manipulate it. That's like the whole point of cryptocurrency. But we've recently just been seeing a lot of like crypto companies. And so we could take a look at Kaspa here. It says, for Kaspa, we look to silver, which presented a different trade-off versus gold in the original Aramaic text. Silver was historically treated as less precious than gold and more circulative, less valuable yet more acceptable as payment. With this prospect, we call this project Kaspa, Aramaic word for silver and money. That's the whole point. Kaspa is trying to be an actual currency. So it's building a really solid foundation of being fast, secure, and decentralized so that people can use it for a medium of exchange. You could use it as a store of value. And then later, they're even going to bring in smart contracts. So you basically have like two huge utilities that they're tapping into, are basically doing what crypto was always intended to be. Like I said earlier, at the end of the day, a crypto can have really good technology and whatnot, but you really do need a strong narrative and a good community. And simply, from what I'm seeing, Terra doesn't have a strong narrative that it can run off of. The only thing it can run off of is saying that it's using BlockDAG, but it's using the same technology that Kaspa is using, and it was built by the founder of Kaspa. So when looking at that, I mean, once people do their proper research, they'll just see that, yeah, you'd rather probably be in Kaspa. And not only that, the whole point of Kaspa is basically to fix Bitcoin's original problems and still stay true to all of those philosophies and principles that Bitcoin holds and people love. It's much easier for people to adopt Kaspa simply because it is following those principles. And a lot of people have been diving deep and learning about Kaspa because of that fact. So I hope you guys enjoyed that video. Please leave a comment down below. I like to hear your thoughts and opinions about it. Leave a like, subscribe to the channel, and as always, don't be average, be different.